The stock market is crashing, and the Great Depression is here. In the past few weeks, the stock market has been dropping very fast. One can easily say that the market has been dropping like a stone. The Dow has fallen by thousands of points. Right now, the stock market is in a bear market, and this is just the beginning. This is the biggest market sell-off since 1987. We have a mass-scale destruction of wealth never seen before, and billions of dollars are being lost from the market every day. It is surprising that because of this global panic, we now have the dollar shortage as the emerging markets continue coping up with the falling local currencies because of this global economic slowdown. The dollar shortage can be seen in the Bloomberg Dollar Index and the DRA spread. Now, this is closely linked to the interbank dollar funding that has skyrocketed in the last 4 weeks. RAID Shadow Legends promotion. Are you tired of playing old cartoonish games? Look, this is your time to start playing a real, fantastic, and an exciting game. Here at Epic Economist, we're very selective when it comes to sponsorships, but we're glad to introduce you to RAID Shadow Legends. This is the most real and exciting game that you will ever see. This is a game I've actually played. I promise you, it is enjoyable. It's the best RPG game out there. I've actually played many RPG games. The RAID Shadow Legends really stands out. This is the most epic game for all of us here at Epic Economist. It has everything you need and expect from an RPG game. The game's absolutely free. It's available for Android, iOS, and the PC. Season 1 already live, and you will be able to win some awesome gifts by participating in daily and weekly challenges. Just click the link in the description to download the game. Enjoy!
RAID Shadow Legends.
The Federal Reserve has used their monetary power to solve some of the liquidity problems of various corporations, but still, the dollar shortage, because global investors have been dumping assets from various emerging markets, and they're now scrambling to get their dollars. The stock market has been plummeting. At the same time, the price of oil has fallen to historic lows. This collapse of oil prices has crippled the struggling petrodollar system. This sharp decline in oil prices has further increased the demand for the dollar. Right now, the world is experiencing unprecedented shortage of dollars. Because of this, the value of the dollar has been rising, and a strong dollar is making it extremely difficult for governments and businesses to service their dollar-based debts because their local currencies have weakened because of this global disruption. This is a big blow to emerging markets, and this will culminate in a global economic crisis. At the same time, the increased demand for the dollar has outweighed the effects from interest rates cut by the Federal Reserve. The Federal Reserve is still coming up with more bailout funds to inject cash into the money markets. It looks as if things are playing out just like it happened back in the 2008 financial crisis. They're trying to keep the backbone of the global economy strong in order to counteract this global economic slowdown. Investors are panicking as they fear losing their money because of this financial crisis, and this is forcing the Federal Reserve to step in to make sure that the markets stay sane. In addition to injecting billions to the repo market, the Federal Reserve is also intervening to help mutual funds and other money markets. This bailout is yet another effort by the Fed to reduce spiking risks in various short-term liquidity markets. These efforts by the Federal Reserve will make loans accessible to financial institutions, and we've yet to see how this will help the collapsing economy. It's just 2 days ago when Jeff Gundlach predicted that the chances of the U.S. economy going to a recession have risen. The odds stand at 90%. Investors are liquidating all their position in the stock market out of this global panic. This is pushing the prices further on the downside. Jeffrey Gundlach said in a tweet, "For the first time in years, I am now not short any U.S. stocks. I covered my last 3 shorts yesterday, 2:37 p.m. EDT. The profits were just too great to not harvest, and the panic is palpable." While the stock market is plummeting, Many American corporations are going through serious financial struggles. Many companies might go bankrupt. It looks that most companies are over-leveraged via share buybacks, and this might not end well. Economists are predicting that this is just the beginning, and this economic crisis might end up being a depression. Many companies are about to go bankrupt, and this is just the beginning of the bailout cascade. The U.S. economy is on the verge of a collapse, and the administration has been holding emergency meetings to deliberate on how they will avoid further meltdown in the markets. Right now, Wall Street is having the most difficult time since the 2008 financial meltdown. Right now, hyperinflation is looming because of this global economic turmoil. The stock market has already hit record lows, and we're experiencing a market crash similar to what we had during the Great Depression. The Fed has also been pumping a lot of liquidity into the markets. They've recently announced that they'll be pumping about $1.5 trillion in addition to the $9 trillion they've already injected to the markets in the last 6 months. The American banks are right now at the edge of collapse because amidst this economic meltdown, they are caught up in huge debts. Most of the banks are over-leveraged 100 to 1. This looks like a bomb that'll soon explode in our faces. Goldman Sachs, Citigroup, JP Morgan, Chase are some of the big speculators right now. They've been caught up in shocking financial troubles. Collectively, these three banks have a total exposure of about $137 trillion in derivatives. If this bursts, the whole American financial system will crash. In the United States, economic numbers are expected to be catastrophic in the first quarter of the year. The chief U.S. economist in JP Morgan, Michael Feroli, is predicting that the U.S. GDP will fall by minus 14%, and this might worsen if the current global panic will not come to an end. Experts are predicting that this panic might continue for the next 12 to 18 months. If this is the case, the real GDP will be worse than the expectations. This means that an economic crisis is inevitable, and if things get out of control, an economic depression will set in. This economic crisis will be global, and the global GDP will also significantly shrink. We might have the biggest GDP contraction in 50 years. The Chinese economy is also being hit hard because of the disruption of supply chains, and nations that are closely linked to China economically will also experience a big economic slowdown. In China, economic growth is expected to shrink by up to 40%. Europe's economy will also contract. Numbers are expected to be worse than what we had during the 2008 global financial crisis. JP Morgan expects that the crash in industrial production will recover swiftly, but they're expecting that the unemployment rates will continue rising across the globe. As it was in the 2008 global financial crisis, millions of people will lose their jobs. Actually, it's projected that in next 1 week, the U.S. unemployment claims will spike above 400,000, and this number will continue rising in the next 2 months. Economists are expecting the economy to perform poorly in the first 2 quarters of 2020 because of this global panic. Unemployment numbers will increase as more companies halt their operations. Right now, the global economic future looks dark, and it's very clear that we have an assured economic meltdown. Almost every American is aware of the 1929 economic meltdown that ushered us to 4 years of economic depression. At this time, the U.S. economy was on a life support machine. The unemployment rate had hit over 25%, and 40% of the banks went bankrupt at that time. Because of this, millions of Americans lost all their savings. 50% of American industries were shut down. The engines of the American industries girded to an abrupt halt. Thousands of farms were foreclosed. Now, no one wants to see this happen to America again, but it might be unavoidable. We have a broken system that no one is willing to mend. For many years, our economy has been a big bubble just like it was prior to the Great Depression. The whole economy has been sustained by debt for the last 10 years. Even now, the Federal Reserve is pumping more cash to the economy every day. Instead of helping, this is making the bubble bigger. Right now, America has turned into a debtor nation. We're consuming more than what we're producing. This economic meltdown is the end of our bloated economy, and the bad economic decisions that have been made by our leaders for years are beginning to haunt us. This economic meltdown can only be prevented if we take the lessons from the Great Depression. The administration should take serious action and stop the legitimization of a casino economy of derivatives, fractious capital, and debt dependence. The technocratic and the banking elites today should be prevented from harming the economy by taking illegitimate debts that ends up creating economic bubbles. This is the time when real action should be taken. Otherwise, we will find ourselves in another depression.